right. Good morning, everybody. Happy, what day is today? Tuesday? Yeah. Welcome to the morning show, Stock Market TV. Spencer, Steve, JC, Alfonso, Todd Sohn is our guest today. Very excited for that. He'll be on the show at 9. He's got some great charts always. He's looking at flows. I like flows more than JC. I think it's interesting. So we'll talk about ETF flows with Todd Sohn from Strategas at 9. It is Tuesday, so I'll have Patrick Donawilla on the show at 9:30 Eastern time, give or take. Let's see what's on the docket for today. What do we got? I got some health insurance news. Health insurance stocks not having a great morning so far. Talk about that. I know JC wants to talk about how different of a market this is from last year. We'll talk about that. We had some M&A, we had some spin-offs, earnings report. That's interesting to me, maybe no one else. Who's buying the crypto dip? That's a good question, Dawson. Good question. All right. Good morning, chat. Welcome to the show. Let's get the show started. And yeah, here we go. Where's my intro? We're missing JC. Steve, he'll be here, I'm told.
Wow.
But I know that if the roles were reversed, he would say start without him. So I did.
So it sounds like we got a heavy news day here. Why don't we hit some of that first?
And heavy is a strong word, but we got some headlines.
I mean, you just rambled off a lot of things. You're making it sound like.
I mean, okay, we can go in no particular order because none of them. I couldn't even tell you which of these I think is probably the health insurance story is the most interesting one. So let's talk health insurance here. The headline overnight: the Centers for Medicare and Medicaid Services they released their final payments that they're going to make to the health insurance providers for Medicare and Medicaid. And it's less than what the street had been expecting. So any company with exposure to Medicare and Medicaid, Humana, UNH, CVS, Elevance Health, I think, ELV, all down this morning on that headline. And that is the reason.
Are they not? It seems like the pre-market activity in IHF, the iShares Healthcare Providers Fund, is pretty wild, like big sell-off, and then
I haven't seen it. JC, welcome.
What's up, gentlemen? How's it going?
Yeah, Steve, but you're right. Right?
Good morning.
IHF.
How was the conference call last night? You guys like that?
I did.
I just saw your request for Chinese stocks.
I was a few minutes late, but I caught most of it.
Yeah, I'm interested. I pinged Strazza yesterday because, we've got definitely a series of Chinese stocks that have been,
Working.
not sucking.
Yeah, some
working. Working's a strong word, but yeah, not terrible. So I think that there's going to continue to be kind of, and again, I think it's going to be new names. I mean, there'll be old names on these lists, but I think there's going to be new names popping up. What were we talking about? Solar yesterday? We're like, let's run a scan on the solar stocks because, obviously we've got some household names from prior cycles, but, I got a few gray hairs, So cycles, we get new names, right?
So I'm going to butcher this, but Daco Energy, its ticker symbol DQ, is a Chinese name, and it is a solar name. And it is completing a really nice base as we speak.
I got one for you.
What's up?
It's not solar, but it's Chinese.
Give it to me.
The car company?
The car company. That's right.
Yeah.
Well, it's not a car company. Well, I guess it is now.
Which one? Xiaomi?
It's a Xiaomi. It's a smartphone maker. But unlike Apple, who gave up on their car product, Xiaomi makes smartphones, and now they make cars. They make EVs.
So this is XIACF on
CY or CY.
XIACY. Does this thing have enough volume?
Hey man, I didn't say nothing about no volume.
Give me the ticker symbol one more time, Strazza.
XIACY.
XIACY.
Trades over the counter.
No, it's a big company. It trades 1 million shares, Strazza. What else you want? It's $50 billion stock, trades 1 million shares. What's wrong with that?
It's a $50 billion market cap.
Sorry. It traded 1 million shares yesterday. It trades 100,000 shares.
So they compete with Apple in the smartphone market. This is a device maker first.
Yep. And now they make cars and they're undercutting Tesla.
It's a nice chart, Spencer.
Yeah.
Nice chart.
Can we do a little morning rundown or shall we?
Oh, we can do a little state of the markets, sure.
We were talking. They're like a Samsung. These guys. They're like a Samsung, right?
Dow futures down 250 points here this morning. S&P futures down 25 handles. That's about 0.5%. Dow futures down about 60 basis points. NASDAQ futures also down 60 bips, over 100 points this morning. Bond futures continue to collapse. And what Strazza is telling me is not a crash. I think we all agree that it is an orderly crash. Orderly?
It's not a crash at all. On market volatility is making like multi-year lows.
Okay, so not a crash. Biggest bond market decline of our lives.
There you go. There you go.
Not a crash. Will we agree that there have been crashes along the way and there will likely be more crashes in the future?
Do you need volatility? I think you need volatility to say crash, and there hasn't been much.
Well, in 22, you had it.
A little bit.
A little bit?
Just look at the giant topping pattern in...
Nevertheless, this non-crashing crash is down almost a full percent on 30-year bond futures this morning, back down towards 117. Gold again up almost a full percent, pushing $2,300. That's American dollars per ounce, $2,300 for gold, new all-time highs. Silver up almost 3% today, pushing that 26 level. That's a big one, 26 and a half, testing that again. Copper, again, up another percent today. 408, hanging out above 4 on that copper. Crude oil futures back to 85, up another 1.5% today. As the dollar mixed in early trading, the volatility index back above 14 and a quarter this morning. U.S. 10-year yields continue to climb higher, pushing 4.4% now as the selling in cryptocurrencies continues as Bitcoin is holding under that key 70,000 level. Bitcoin down 4,000 points today, holding below 70,000. That thing is messy. Ethereum still holding below that 3,700 right now at 3,300, down 5% on the day. So cryptocurrencies taking it on the chin this morning, along with tech and stocks. Solana down 6%, down 12 points, down to 180. Total crypto market cap down to 2.4 trillion. Spencer Israel. Rotation. It's a new market regime. You could fight it if you want. I like to embrace it, Straz. I like to embrace it.
I think this move in silver is finally real. The miners are starting to work.
I mean, you want to talk about how price changes sentiment. Do you hear this guy, Spencer? You hear this guy? Look at this boomer over here telling me about silver. Look at you.
Commodity stocks, they're part of that.
The best slide, I think, of yesterday's entire presentation, I think, was the gold and silver one.
Which one?
I'm going to throw it up.
10 gold and silver charts.
The one of the table.
That was good.
Yeah, I mean, I think it really tells the story. Here, hold on one sec. I'm just going to put it in. For some reason, it's not letting me add the slide here. Why isn't it letting me do that?
You may have to refresh. Fonts had that problem earlier.
Still not letting me. Here, I'm just going to put it in the Slack. Throw that up there. That's the big one to me. That one really stands out. Here, why isn't this? Why are we having so much difficulty this morning?
Don't know.
You know the table, so it's got all the gold and silver miners from the Philadelphia Gold and Silver Index, which to me, I mean, this is one of the classic gold bucks. I put it in the Slack. Throw it up there. I don't know why it's not letting me. You got it, Spencer?
Yeah, Fonz got it.
Here we go.
right, so what is this now?
So this is the Philadelphia Gold and Silver Index and all of the stocks in that index, right? This is like an old school, gold bugs from back in the day from prior cycles know this one well. This one goes back. So it's got all the biggest gold and silver miners, right? And then up on the top, you've got all the different moving averages, 10-day moving average, 20, 30, 50, 100, 150, 200, 250. If the cell is green, that means that the gold stock is above that moving average. If the cell is red, that means it's below that moving average. And what really stands out to me is just how much green there is. In other words, these things are in uptrends. These things are in short-term uptrends. They're intermediate-term uptrends. A lot of them are in long-term uptrends, which, man, when was the last time you could say that gold and silver stocks were in long-term uptrends, right?
Yeah. And it's kind of happened fast. So there is momentum behind this price action. So Ian, the other day, just last week, we're on a call. He's like, a lot of these gold miners look good. I'm like, what? And I looked for myself.
No one ever.
He's not wrong. Some breakouts are finally sticking. The leaders are leading. Some longs are already working. Silver miners, I mean, look at First Majestic. Wheat and precious metals looks good. So I'm interested. I'm interested, JC.
I think that this is not a precious metal story. I continue to think this is a metal story. It's a commodity story in general, but metals definitely. Throw up that Freeport-McMoRan chart.
And to be clear, like I've been saying, I would still rather own the other metals, copper and steel, namely.
I really like the trade that we put on, not to give too many details, but I really like the trade we put on yesterday where we're buying the January calls and we're selling the May calls to pay for those. As you get that short-term deterioration, gives us long exposure to Freeport-McMoRan for the rest of the year. I like that a lot.
Okay.
No?
Yeah, I like it too.
Yeah, I like it a lot. Sean and I are going to be talking tomorrow during our execution lab on how we choose, and specifically Sean, I like to weigh in, but Sean really does the heavy lifting in terms of choosing the strike price, choosing the expiration. Spencer, if you want to drop the link there on how people could join us for the execution lab tomorrow. This is really great because last Thursday what we did was Sean walked through the 4 different scenarios, right? When making a directional bet in the market, you're either bullish or bearish, right? You either think it goes up or it goes down. And then it's either a low volatility regime for that stock or a high volatility regime for that stock. So there's only 4 different scenarios. And for each one of those scenarios, there's the perfect trade. So we went over those in a free webinar last week. If you haven't seen it, definitely check it out. Ping Spencer or Mary, she'll send you the link, or Spencer will drop that here. But tomorrow, we are going over exactly how Sean chooses the expiration and the strike price. Again, I like to weigh in and we debate. And sometimes, we can change Sean's mind, right, Strazza? Sometimes it's like, oh, why are we using this particular, expiration? Let's go out further. And Sean's like, really? You want to go out further? It's like, yeah. So he kind of, just because Sean likes a particular expiration doesn't mean we're necessarily going to agree with him. Sometimes he ends up convincing us, but it goes both ways usually, right?
It's great. That's what we're behind the scenes doing every day. Just, hey, Sean, look at this stock. What do the options chains look like? What do you think? And we go back and forth.
I really like those meetings. We got our team weekly meeting tomorrow. And, we go over a lot of things in these meetings. We go over the equities market, the bond market, the commodities market, the Forex markets, the crypto markets, crypto stocks, right? Like we really dive into everything. And then it's like, all right, Sean, what stands out to you, buddy? Right? And sometimes like I kind of know where Sean's head at. Sometimes he comes out from left field, right?
Yeah, we're usually on the same page. Usually.
Sometimes I'm walking in, I'm like, Sean's definitely going to want to sell premium today, right? Sometimes I'm a little bit surprised. Sean's like, we got a little too much of that. I'm looking for a little bit of this, right?
Sean's been loving the directional bets for a while now.
Well, that's because volatility's been so cheap.
Yeah.
So
he's often a sell premium first guy. I'm just saying. He's been very directional lately. I'm into it.
Sean does a really good job of adapting to the environment. And if we're in a high volatility regime, he's not going to be making a lot of directional bets, right? He's going to be looking for mean reversions. He's going to be looking to sell premium. There's a time and a place,
this is what I want to talk about at Portfolio Accelerator with the three of us. I think it's really cool because I think we've all done that, to be honest. I think this deserves a bigger conversation. We've all kind of changed certain behaviors, particularly the way we trade and view markets, this bull market, and I think in every bull market. And that's okay.
The adaptation.
Yeah, for sure.
You know, does anybody know where we got this from? Because this is like an old school. Throw up slide 3, Spencer. This is old school. Like I feel like I used to go to conferences and stuff like that, like when I was younger, and like they would print these out and they would hand them out to people, right? And they would be like laminated, right? Spencer, throw that up there. Throw up slide 3. You know, they would be like laminated, and we basically just took that idea. Zoom in there, and we basically just took that idea and did it ourselves. But I like to give credit where credit is due. Who inspired this? Does anybody know?
You ever make like a patchwork quilt in like home ec class?
I mean, I personally didn't, but I know what you're talking about.
I did. Love that class. This reminds me of a patchwork quilt.
Yeah, I don't know who came up with this, JC, but I've seen it for. I mean, it's been a Novel Investor has one that I've used for years.
No, we invented it.
All right.
Well, we have our own twist. We're doing quarterly stuff, but this is definitely inspired from somebody else. I always like to give credit where it's due. If anybody knows who came up with this originally, please chime in. Love for you to love to give the credit. Nevertheless, great visual, shows you the best and worst performing sectors every single quarter. Energy at the top of that list. Look, technology way down. Really, really interesting. Technology was actually down for the month of March. Energy was up double digits for the month of March, dude. Double digits.
I love the beta of energy. Look, it's either first or it's last, right?
Well, there's so little. That's the thing, right? So they're easier to move. Right? It's not like you're, you know, like think about Apple. Like think about Apple. Apple's lost investors $500 billion. Literally, $500 billion gone. Like that. Wiped out. $500 billion. Like it's nothing. There are only like 10 companies in the world worth more than $500 billion. Apple's lost that just in a few months. Spencer, throw up slide 4 there.
Yeah, but
you're right, Spencer. It speaks to the beta of certain groups, this visualization, really well, because technology and communications are the same way. They're either at the top or more or less on the bottom.
Yeah, but nobody thinks, or maybe they do, and I'm wrong, but I feel like people don't associate beta with like energy.
They should. They sure should.
I guess.
Commodity stocks in general. See, cyclical.
Yeah, commodity is true. Okay, that's fair.
Cyclical stocks, people don't know this. They write them off. They don't even pay attention to them. I'm a growth stock investor people. Cyclical stocks will move with just as much juice or momentum as the speculative growth stocks will during bull markets. These things are super high beta.
Yeah.
Look at so I don't know, something like Rig or some of these EMP names this morning. They're probably up 5-10% pre-market.
Rig is up.
Well, again, it goes back to the market cap. It's easier to move a $2 billion company or a $4 billion company or an $8 billion company than a $3 trillion company or you know, right?
Yeah, and it's also just the economics of these businesses. They're so cyclical. They go from losing money to 5-10xing their sales and earnings, and the market has to catch up, right? So they're very wavy throughout different cycles.
You know, it'd be interesting, a bubble chart of all the sectors broken down by like the market cap in some way. I'm not.
Oh man, yeah, we used to do a lot of work on these bubble charts, and
yeah, but I don't think that would be a bubble chart. That would be a pie chart.
Well,
no. So you could see
with the bubbles.
Yeah, so you could see how, like, the larger ones on the end and the smaller ones on, closer to the.
I like a pie chart for that. I like where your head is at. I like where your head is at with the bubbles, though, Spencer. I like the world needs more bubbles.
So that you can see and you color code it, so you can see. Oh, look, the energy is all down on this end.
What's the Y and X axis?
We've done this, guys.
The X axis is market cap. I don't know what the Y axis is. I didn't get that far.
Well, to have a bubble, you need 2 axes, and then you need the size of the bubble. So why wouldn't you just, if you want to like visualize the different market capitalizations of each sector, why wouldn't you just use a pie chart?
In my head, it's a good idea. Just trust me.
Listen, I like where your head is at. The world needs more bubbles. So I want everybody to err on the side of more bubbles. So I like where your head is at, Spencer. I just think I think a pie chart.
I can't describe what I'm thinking, but trust me. It's good.
Can you throw up slide 4?
It exists, Spencer.
Yeah. I
Look at
see. I
slide
see
4.
what is this?
So here we're looking at energy up double digits. This is just for the month of March. But with energy up double digits and technology down for the month of March and consumer discretionary down for the month of March, I think there's a bigger story here.
What is it?
The sectors with the smallest exposure to the major indexes are the best performing stocks. And the sectors with the largest exposure and weighting, right, in the major indexes are the worst performing stocks. So if you own the major indexes, you're in the worst performing stocks and you have little to no exposure at all in the best performing stocks. Like, for example, in the NASDAQ 100, you're getting no energy, no utilities, no materials, no financials, no industrials, no real estate, nothing.
Okay.
In the S&P 500, you're getting what? 3% energy. You're getting 2% materials. In the Dow, you're getting 2% energy, no materials, right?
I hear you. It's true. These are the facts. And if we do get some sustained and material weakness from big cap tech, it will be felt at the index level and it will be felt by passive investors. I also think that right now, sure, Apple's been weak, Tesla hasn't been good, we know. I think we're writing off big tech. When I say we, the collective we, a little bit soon here. Did you see Google yesterday? These stocks are still working. Kenny Polcari was on yesterday. I loved what he said. I loved a lot of the things that he said. But one of them was simply that he's not rotating out of tech and into these other groups, materials, energy, that we've been talking about this morning for the past few days and weeks now. He's not rotating out of tech to get into them. He's just adding exposure to them, not necessarily selling his tech stocks. I don't think you throw out your tech stocks right now. These things have been so good. Every dip has been bought. It's a little too soon. What do you think?
I think that you don't need to group them all as their one thing. I
Fine,
think
don't own Apple.
the best charts. Hold on.
Okay, yeah.
The best charts from that Grant put up. One of the best, more interesting charts that we looked at yesterday in the Slack was the correlations amongst components of the S&P 500 is at the lowest levels we've seen in years, which is perfectly consistent with bull markets, right? As bull markets progress, these correlations continue to come off. You know, when we're in bear markets and we're in high volatility environments, correlations spike to 1. We see that. So I think in more early cycle environments, you can group them more together because correlations are more positive with one another. At this point, you can call out terrible looking tech stocks and you could call out great looking tech stocks, right? So I think that's I wouldn't just necessarily group them all together. I think I think it's but I think you have to pick and choose. Also, you can't just buy them all either.
So
right? I mean, our Apple shorts working great. Our Lululemon shorts are working great. Like, I mean, these things are getting destroyed. Meanwhile, Google's making new highs, right? So like there's some things that are working to the upside. There's some things that are working to the downside. And by the way, with correlations as low as they currently are, isn't that normal? Isn't that to be expected?
Sometimes they're this low, and sometimes, like you said, they're very high too during volatile periods. I think it's an overused phrase, and I don't love it, but it really is a stock picker's market, right? So act accordingly. I think that's what you're saying. Throw up the chart of Google. Just because Apple looks like crap right now, JC knows, won't stop talking about it, doesn't mean you shouldn't buy this breakout in Google.
I mean, Apple, I'm old enough to remember when Apple was a big deal. Apple was the most important company in the world. This was like 3 months ago, bro. And it goes down every day. When was the last time? It's interesting to me. When was the last time that the NASDAQ 100 and Apple were moving in the opposite directions for this long?
Yeah, I've never looked at Apple as a market indicator. It's an index indicator. Strazza's Bob Along's working great. No, those didn't work. Can't win them all, dumpster diver. Oh, it's good.
Who's the guest today?
Todd Sohn.
Ooh, Todd Sohn in the house. Before we bring in Todd, Spencer, anything we need to know?
We were talking about insurance stocks health insurance stocks when you came in. There was a headline from the, let me get this right, the Centers for Medicare and Medicaid Services course, very well-known government agency, and they decide how much the government pays the health insurance companies for Medicare and Medicaid. And I guess what I'm reading is normally they issue several different like estimates and then a final rate, and usually the rate increases. And this time the rate didn't increase compared to the prior estimates. So Humana, UNH, CVS, all these companies that rely that get payments for Medicare and Medicaid are going to be getting less payments from the government for that. So that's why they're all down this morning.
You know, JC talks a lot. These stocks are so boring, but they're so good. JC talks a lot about owning energy assets as a hedge for inflation that we'll all feel at the pump. You got to own these stocks. Over the past decade, what a hedge for healthcare, something that everybody has to deal with. Very expensive, only gets more and more expensive.
That's true.
Terrible to deal with. If you zoom out on a chart like UNH, that was your hedge.
What about, speaking of boring, before we bring in Todd, throw up slides 2 and 3 here, Spencer. This was from last night's conference call. You know, we talk about these not a top formations so often. I'm seeing support and resistance in utilities at the sector level, but then look at the bellwether utility stock. What type of market are we in where JC's calling out the utility stocks? Isn't this a classic not a top, Strazza? Classic not a top.
So shout out Florida.
Oh yeah, they are Floridians.
This is Florida Power and Light. I believe they're headquartered Juneau.
I don't know. Growing up in Miami, we never went north. We always went south.
We know. Yeah, this looks good. Look, this is one of the growthier ones. Excuse the oxymoron, I guess. But this is as growthy as a utility gets.
Really?
I think so.
Why is this so growthy?
I don't know. They're big too. 130 billion. Yeah.
They are humongous, 130 billion. But look what I did. This is my new thing. For charts that I think are not a top, like the not a top formation, I'm putting the arc in green. You like that?
Ooh, you're color coding.
You see that? You see that? It's like it's a bullish top.
Bullish top.
Not a top.
You know, we need a spot in the CMT curriculum about the bullish tops.
The bullish tops. Nobody talks about the bullish tops. I love a good bullish top. Disney was a classic. Disney's up 50% because it was not a top. How many times have we seen this, Strazza?
I think you guys, every time I look at their chart, CEG is a utility. I think it's regulated gas or electrical utility. Yeah.
Anyway, I thought this was interesting because we don't talk a lot about utility stocks for good reason. They haven't really been doing much for a while, but
no, because it's a bull market, right? So, like, should we be talking about utility stocks?
When you see a not a top like this, we certainly are. I mean, hell yeah, let's go, baby. I mean, you're talking about a potential. I mean, you're looking at a 80%, 75% move higher potentially.
Todd Sohn says it's an AI play. I can't wait to hear this.
Oh my God, I can't. I think he's being obnoxious.
He said he's not kidding either.
So Wavy's saying the same thing. The sleeper trade of AI.
The picks and shuffles AI names.
I need to hear this. I got to hear why. Let's
go. Don't they require power? In all seriousness,
AI requires power. AI does require power, Spencer.
It's true. All right, let's bring Todd on.
I guess. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh, Mr. Todd Sohn, what's up, my man?
How are you?
No complaints. You know, just looking at utility stocks. Where are we in the cycle? And when we're talking utilities,
CEG is I've been told it's an AI play.
CEG, got it. So not NEE.
I don't know about NEE, but CEG looks like a tech stock, right? And I've had random people say, "Yeah, it's something with AI." I'm like, I don't really know much about that. But the way it trades, I think, kind of makes sense. And I guess the idea is, okay, these things actually, they need to power the machines.
I guess. And what about like Bitcoin miners and stuff like that?
Yeah, that too. Big miners, it's all tied in together.
All right.
But
you say so.
That's the rumors that I hear.
Todd, you're an old schooler like me. Can you Spencer, can you throw up slide 4? Who invented this? Because it wasn't us. We were inspired by it, and we make our own. But somebody invented this, and you might know. I feel like it was an ETF company or some kind of mutual fund company.
The quilt?
You've seen these, like
Yeah,
they laminate them and hand them out.
Yeah, the Return Quilt.
Yeah.
Who I don't know who the first person to do it was. They're interesting, but they're also overwhelming for me.
Totally. Well, I just look at the line. I look at the one on the right, the column on the right. Is the one I'm interested in.
What are you going to do with the one from 7 years ago? I don't know.
Right.
The quilt is popular for whatever reason. People like it as.
I'm into it. So it's a little overwhelming for you, Todd, which I'm not going to disagree. But I'm definitely into it. I'm into it.
It's too colorful.
Now, I see what you're doing with energy and tech there, which I think is important.
All right. So why don't since you don't have an answer for me, Todd? Thanks.
I don't.
Why don't you tell me why you find these circles and arrows interesting?
So, tech has been a leader for a while, but I think that is starting to get fatigued, right? I think you're starting to see some of these names pause. We know what Apple's done. From my own corner, in the prior months or so, we talked about tech flows have been really aggressive, and I think they're off sides, and you're finally starting to see some of that manifest here with tech slowing down. Now, if you're worried about that, you're now rotating into energy, materials. We'll see about utilities. I don't know about that yet, but energy and materials have been ignored, and now that you have oil perking up, rates perking up, maybe a little whiffs of inflation here or whatnot, it seems to make sense that that's the next move here for the second quarter, and they're timely.
Yeah, I mean, listen, what utilities are pushing up against new 8-month highs, 9-month highs? Like, it's not terrible. Yeah, I'm more interested in the individual stock itself because I really like that not a top formation. You like that?
Yeah, I like the green arch. That was I've never thought about that. That was clever.
I did it by accident. I'm not gonna lie. I did it by accident. I was like, I'm gonna leave that.
He still has good ideas sometimes.
I think 2Q. I think the idea of some sort of speed bump correction makes sense. We've been on such a monster run. A lot of things are extended that are important to indices. The smallest drawdown in the first quarter for the S&P was 1.7%. That's nothing, right? Equities had a smaller drawdown than Treasury bonds last quarter.
Yeah.
And so participation's still great. It's still a bull market, but sometimes these things need to cool off. And so this is where utilities come in if you need a hideout somewhere, maybe staples or even the energy. I think energy is actually more of a defensive play than utilities.
Yeah, agreed.
At this point.
Agreed, 100%. Commodities in general, not just energy, maybe base metals too. You can mix in there precious metals.
Yeah,
energy.
Look at the S&P Industrial Metals Index today. That's if it was viable. If I was a stock, you'd probably be looking at it to buy.
Your boy Strazza says that the bond market has not been crashing.
Crash
no.
Just because bond market volatility is so low doesn't mean it's not a crash. This thing's been crashing for years now. Is this not?
That's exactly
44. The ag has gone 44 months without a new all-time high. That's a record by leaps and bounds.
But does that necessarily mean it's a crash? No.
No, a crash to me is like 1987.
Yeah.
March 2020 type of stuff. This is more like a slow motion, really bad.
These markets, first of all. We're talking about the bond market.
I don't think it's a crash.
Like,
am I supposed to think it's a crash?
Trying to hit a home run when you're shooting a free throw shot here. We're talking about two different sports.
I'm a basketball guy.
All right. So in baseball, you hit home runs. In basketball, you shoot free throws, right? So we're shooting free throws here. Has nothing to do with baseball. So you're comparing the bond market today to the 1987 stock market crash. Like, I think you're apples and oranges, Todd. These are two different things, man. For the bond market, like, it's a downtrend. Sean's right. Why can't we just call it a downtrend? No doubt.
I'm not on the crash level yet.
this thing is getting destroyed. And what about these lower rates? I keep seeing rates go up. What
No,
lower rates?
The higher rates thing, I think, will upset the consensus the most. I think, right?
Dude, the U.S. 10-year yield's hitting the highest level since Thanksgiving.
But the consensus is for however many rate cuts this year. 1, 2, 3. Well, are we sure there's going to be any? You know,
coming into this year, it was like 5, 6. We were talking.
Yeah, I always see the probabilities of cuts and whatnot. The number never seems to be right.
No,
And again, it's a moving target. It's probabilities, but it's always way off. It feels like, and so I wonder. Rates are starting to perk back up. Oil and commodities are perking back up. You tend to wonder, okay, maybe there will be no cuts at some point.
What about tips, man?
Tips come back into vogue. All the money that went into tips a few years ago, when you actually kind of wanted them, is left. All the money that went into energy has left. All the money that went to materials is left. So I really think the bar is super low for those areas.
Hold on, Todd. You're saying that because of the flows?
Yeah, exactly.
Can we talk about that? Because I know you got some flow charts, and I'm always interested in your take, because to me, I have a hard time wrapping my head around, the value in seeing certain flows. Like, you're my go-to guy when it comes to this. Like, you follow it very closely. And like, to me, I'm more of like, it's like on the peripherals for me. So like, it's not where you definitely spend a lot more time. So I trust your take on these things a lot more than what I can come up with. So I'd love to hear your thoughts. I really like your point that the money that flowed into tips and energy is gone, and that's similar money, right? They're there for the same reasons, right? So I guess that makes sense. But to the point where we're at washout levels and money's coming back, rotating in.
Exactly. So flows you don't use flows as a signal, right? It's not like a breakout or a moving average cross or something like that. But they're a great supplemental clue data point on investor attitudes, right? They tell us in real time basically what people are doing with their money. And there's a lot of nuance and noise because of models and whatnot and rebalancings. But if I'm trying to gauge when something looks timely, like energy, and might be improving, and I see that there hasn't really been any inflows and they're all going to tech instead, that starts to create an interesting story and thesis for me. That's really the way I look at it. And so a few years ago, money was piling in anything commodity sensitive. And a lot of that has left since the peak of inflation, since over the last year even. I find it curious that there hasn't been any money into gold for whatever reason that is. Perhaps I think that's because there's so many other areas to invest and trade.
So even though gold and the gold ETF are making new all-time highs, you still haven't seen the flows.
You've had outflows from gold ETFs. And I don't have a good reason other than stocks have worked, cryptos worked, and you get income on your cash.
When you say gold ETFs, it's just GLD and GDX?
GLD, IAU, that's the iShares version. Basically the underlying gold ETFs, not even GDX. But that would,
really?
you could toss GDX in there too. But I'm talking straight physical gold here.
Got it.
Usually,
but you're not seeing it in the GDX either. Not that there's so much money in the GDX. The GDX is $11 billion, dude. It's nothing.
I mean, it's decent, but I'm talking the GLD type stuff, because when that
11 billion is decent. You think that's decent for GDX? That
11,
low.
yeah.
How do fund flows look in general into commodity assets, like just broadly speaking?
Outflows.
Not outflows. So not even
outflows.
Like low inflows. It's literally net outflows.
And a lot of that's been driven by GLD, but even the broader commodity type stuff that are all the futures involved in there, there's still outflows too. Totally different.
XLB, nothing. Breaking out to new all-time highs, nothing.
Materials, nothing. Energy, nothing. And that's for the equity space. I'm talking like actual commodity ETFs. There's not a ton there. It's all tech and crypto.
This is a good question. So there are commodity ETFs, but commodities don't trend like equities. So it's not like you could buy the S&P 500 for commodities and they're just always going to go up eventually. It doesn't work that way in commodities that are more mean reverting in nature. Yep. It's not like a company. They don't kick out the bad ones and buy more of the best ones. Like, it doesn't work that way. So don't investors need to be more commodity group specific? Like, Buy a metals ETF if you want to be in metals. Buy a energy ETF if you want to be in energy. Buy an ag ETF if you want to be in ags. And even those, you got your cocos, and then you got your, you got different scenarios even within ag. So it's more complicated.
It's definitely more complicated, and you're either buying a spot product like gold or the ag commodities are all futures based. So then you got to deal with tracking error versus spot, the roll yield. It's definitely, you can't just blindly buy. You got to do a little bit of due diligence.
And if you zoom out on some of these commodities charts, you're right, JC. They've just gone sideways forever. We talk about how good cocoa's been, but before this, it went nowhere for 50 years.
Yeah.
Cocoa is doing an AI thing.
Yeah, it is. These millennials, they don't know, Todd, they don't know about commodities and precious metals. If you're a financial advisor and you're trying to give your families whose money you manage exposure to commodities, or if you are managing your own portfolio and you want exposure to commodities, right? Like, how do you think about that? Is it like you buy some USO, you buy some GLD, maybe some XLE? Like, how do you think about like a basket?
Yeah, and there's a lot of different ways to do this, right? So there's DBC, that's the total basket, or there's PDBC, which means you don't get a K1 form, which is a tax form that people hate. The simplest way would be
Strazza's face.
Now I'm talking sexy words to Strazza with no K1.
You get very excited.
You can do that with PDBA. That's the K1 free ag fund. But if you want commodity exposure, I mean, the easiest way to do it is just underlying equity.
Dude, this thing trades 8,000 shares a day. Who's going to buy that?
You'd be surprised. The wackos out there who need it, who want it, like Strazza. They want that K1.
It trades 8,000 shares, dude. Can't touch it.
DBA looks great.
DBA is all cocoa right now. Like when you look at,
because they haven't rebalanced. Is that why?
Yeah, I don't know when the rebalance is, but when I looked at a few weeks ago what the contribution of the return of DBA was, and it was like 80% of it was cocoa. Because cocoa is just going nuts.
Breath is
still, wheat, sugar, those are all kind of whatever.
Yeah, breath is still not great in these different commodities groups, even agriculture.
Yeah, the ags, I think, is hit or miss. The industrial metals are interesting to me. Aluminum, copper, that's a little bit more timely and technically attractive. And then we know what gold's doing. But the ag space is not quite there. And then there's oil, which maybe this moves for real. Maybe.
So all this talk about commodities, if you had to pick like one group, is it materials? Is it energy? Is it specifically something in one of those groups?
It's energy and metals.
It's energy. The problem is,
and then you can pick your spots in the ags if you really want.
We got 5 energy subgroups. Which one?
Uranium, then EMP.
Wow. Uranium woke back up yesterday.
Uranium got extended.
You guys are talking about stocks, but you guys are talking about stocks.
We could talk about anything.
CCJ, right?
CCJ NXE looks good.
That's the big boy.
So
these are all stocks. I'm talking about commodity specific. Like if investors want commodity specific exposure, what are you thinking? Energy and metals, base and precious?
Oh yeah. Energy and base and precious.
Okay. I would argue that commodity stocks, Freeport-McMoRan gives me commodity specific exposure.
This is true.
Yeah.
I don't know if there's a good answer. I mean, some people may not want the actual commodity exposure, and they may just play it through Freeport.
Futures are a pain in the neck. I would just buy the equities.
The easiest, simplest route is to buy XME, or COPX. That's copper miners. And you can. But if you're like, what's that?
And these charts are very buyable right now. These are some fresh.
Yeah, look, they're really interesting charts. My only thing is we've been here before, and they always. You guys do.
You know what we did? You know what we did, Todd? Yesterday we bought January calls, out of the money calls in Freeport, and then we sold the May calls to help pay for those. So we're going to get the deterioration in the short term to help pay for the ones out in January, giving us long exposure in Freeport for the end of the year.
Options make sense to me for a lot of these names that look great and then they never actually do anything.
Because you could take advantage of the short-term churn to help pay for the long-term, longer-term, long exposure.
Like BHPs like that, or a Rio Tinto, where it's like, oh, these are such big bases, and then they look like they're finally going to have this huge move, and it turns itself to be such a head fake.
BHP looks like copper futures.
Yeah, all those names involved there, and these global PIC is another fund right there, global metals and mining. So you get all of them involved.
So just buy the leaders. Isn't that the playbook?
Yeah, and then you buy Southern Copper. Then that's the one that broke out.
Well,
right?
yeah, that's the best looking one.
A lot of steel look really good. Nucor, Reliance, Steel Dynamics,
Cleveland Cliffs.
Yeah.
CLF.
Can we talk? Hold on. Let's get into some of these delistings, because I know you're going to talk about the meme delisting, but I also I want to hear your thoughts on Barclays, iPath, Commodities, ETFs all getting delisted last year.
Yeah, well, so those were ETNs.
So what? Why should that? As somebody as us who looks at these sort of listings and delistings from kind of like a sentiment perspective, why should it matter whether they're ETFs or ETNs? Out of curiosity.
So an ETN is basically a bond. It's a debt instrument that these banks would issue and say, all right, we'll give you the return. It's like a swap. We'll give you the return of this commodity, this index, for however long, and then it'll mature in 40 years, or they'll roll it over. And I think when you get really volatile moves, not related to cocoa, but even volatility, like the actual VIX, they get caught off sides and it blows up their whole book. It's basically the simplest way to put it.
Right.
And it's just too much risk for them. And there's also not a, I mean, there's demand for certain people in, larger institutions who want the note instead of the actual ETF. Like they'll create it for themselves and they'll just be on the exchange. But if they ever get tired of that and they leave, it's kind of like, why are you running this product? It's too expensive to have. So those are on their way out, basically. And Barclays just shut the whole thing. I think Credit Suisse doesn't have many left.
I mean, just when you need the NIB cocoa ETF.
Cocoa. So DBA is your best bet for cocoa. I talked to a fellow CMT. I don't know if he's been on the show, Jake Hanley. He's at Tucrium.
No.
I know Tecrium. I know the ETF company.
I'll connect you guys. They don't have a cocoa fund for some reason. I asked them, I said, why not? Because they have cane, they have wheat, they have soybeans, corn.
They have corn.
They don't have cocoa.
Yeah.
If you guys gotta get cocoa, this would have been perfect.
Wait, so Todd, are you saying that they eventually maybe or likely bring similar funds back, but just structure them differently? I
think that's probably Tucrium is the one.
They've always been the leaders in the space.
So when this commodities bull market is all said and done, we should have a whole new suite of commodity ETFs that we can mark up a chart and see, look, they launched them right at the.
Yeah, I think it also depends on how big the actual market is. I don't know how big is cocoa for real. I don't actually know that.
5% of the CRB.
Yeah, like is that? Really...
I only know that because I just looked it up.
like wheat, I think and corn are more traded, right? Oil, obviously, but I just don't know how big of a market cocoa is for something like that.
I don't know. We'd have to ask Ian.
Yeah, Ian.
But yeah, so the ETN business is not all the European banks are involved in it. And that's basically what you need to know about that. But so there's a risk of closure that they can just call up and say, all right, we're closing out this bond. We're calling it back. So they're problematic.
Yeah.
Can you tell me about you're not the type of person that is constantly talking about memes.
I was just going to ask the same question.
I'm very curious. I'm very curious as your thoughts on the current memification of the equities market and communications amongst millennials.
We know meme from Roundhill is gone. That vanquished a few months ago. And now I saw this the other day that the underlying issuer, the underlying index calculation team at Select, they're closing down the meme index. It's funny that this is happening now as you have the DJT stuff.
Yep.
But what I find curious as all this is happening, look at a stock like BlackBerry, BB.
Big meme.
Right? That stock is on the lows, AMC and GME are on the lows. So as much as it feels like a meme type environment, it's way different than 2020.
Yeah, but that was the last cycle. That was the last meme cycle. It's a new meme cycle. There was no Geo Biden back then. There was no Pepe token, right?
I don't know about that. I only know Dog with Hat.
No, but Todd, you're right. The traditional meme coin or meme stocks from the pandemic bull, GameStop, AMC, BlackBerry. They're all
But
making
those were short squeezes. But those were short squeezes that turned into memes. But those are classic short squeezes.
Yeah.
Isn't that how it usually happens?
I don't know what a meme.
These memes are not short squeezes.
What is a meme stock to begin with?
JC can define it.
A meme stock
Or meme asset.
What's a meme?
That way.
Yeah, it's driven by a community with a certain commonality in cultural beliefs, whatever that might be. It could be a cartoon of a frog. It could be the Trumpster. It could be, whatever. Bitcoin is a meme. These people. Look at the Trump one, for example. This is a group of people with common beliefs and common interests, essentially willing this into being, right? I mean, that's essentially what a meme is. It's just a community of buyers that want something to exist and make it happen, is really what it is. And that feeds upon itself. It's like a feedback loop, right? So you see it in all kinds of stuff. You see it in, like the TradFi bro, you're seeing it in the Geo Bowden, you see it in the Pepe, the Book of Meme, right? You got all these things. Dog with hat.
By the way, speaking of ETNs, ticker 4X, XXXX.
Can we talk about that? By the way, don't Google it. I did that.
Don't do it from a public computer.
Don't do it from a public computer. Don't Google it. XXXX. Tell me a little bit about this.
That's an ETN, and it gives you 4x S&P leverage. Now you can't get that in an ETF. They only limit you to 2x now. Regulatory rules.
They got rules.
What do they do with the triples then? Like the fast grain.
The triples were grandfathered in. They got grandfathered in.
Ooh, all right.
So, but there was rules a few years ago. They said, all right, we're limiting it to 2x. But the note version, the ETN, the less regulated version, if someone wants to do 4x, let it happen.
That's so junky. Loophole.
I don't know how many you'll see because, they can blow up instantly. If you start doing this on single stocks, they won't even have a product.
Who did it? Whose is this? Max?
This is BMO.
BMO, yeah.
Like the accounting company? Like
that's
Bank of Montreal.
Bank of Montreal. You see. Well, Bank of Montreal.
Isn't it like people who know use BMO or something like that? Isn't it?
BMO.
BDO.
BMO is not like the issuer; it's their bonds, right? But the issuer is that there's like another firm, right?
Max,
right.
I forget what their actual, if the name is Max or something like that. But they do an airlines, they do oil, the 3x, I think some auto ones out there, and that's for the real junkies.
The 4x ETF is definitely going to end well, definitely.
How'd you make your riches? It was the 4x ETF.
The 4x, right. It was the quad leverage ETF. By the way, if we get a 1987, that thing's a zero.
It's done. That's what happened to the Vol ETF like 5 years ago. Yeah, XIV. You gotta blow up. That's the problem with these ETNs. They blow up and the thing's gone in a second and you're screwed.
Quad. This is a day trading vehicle anyway, right? Obviously.
Yeah.
So you can't hold this for more than a day.
It's been perfect for the last since October 27th.
It serves a purpose. It's a day trading vehicle for day traders. So you're going to be out in a few hours anyway. You know your risk going in. I don't have a problem with it. I'm all for it.
No, I don't have a problem as long as you know what you're doing. And
yeah, you don't have a problem with it. You think it's funny. I
think it's hilarious.
I think it's great.
4x, and that's the ticker they went with.
Oh yeah, make it 5, make it 10. What's the difference? Let's go.
They got 5 over in Europe. So
do they?
Oh yeah, and on individual stocks, all sorts of crazy stuff there.
That's wild. That's wild because the Europeans tend to be a little more conservative than the Americans. The junkies are out in Asia.
They let it, that too. They let Wild West go there.
Wait,
here it's
question for Todd from Wavy in the chat. Any concern for the amount of structured products created that sell volatility that are like XIV? They're prone to, or do you not think about that?
I've read articles about it.
Yeah,
I get it. I don't know about the market structure stuff. Can it happen again? Absolutely. And option writing ETFs are just all the rage right now. They're huge. Everyone, every week, covered call strategy, enhanced income. Those are all coming out now. Is it feel a little bubbly-ish in a way? Yes. I just don't know what the the implications would be. I'm not into market structure as much. But from what I've read, these derivative strategists who are actually really focusing on it, they said, it's a possibility, but they don't seem too concerned, which maybe is the concern.
What was that big covered call one a couple years? Was it JEPI?
Yeah, JEPI is the big one.
Yeah.
And then there's JEPQ, which is the NASDAQ 100, the same product. And now there's a whole slew of copycats now. And they're all basically doing the same thing, writing calls on individual stocks, or SVOL from Simplify actually writes calls on the VIX, on the volatility. So that's an interesting one. It's a short vol product.
I remember weren't the flows into JEPI like off the chart a couple years back? It was the only way to get paid.
It was just taking in money every single day because
Right.
people love the product. And 2022 is the perfect year for that product.
Right.
And now it's still a good product. It's still managed very well. It's just lagging because of the straight up market.
Yep.
But there's always going to be an event that we wake up to, and the VIX is going to be up 50%, and that's going to hurt. That's going to blow up something for a few days.
You're seeing rotation into the equally weighted indexes, right? You notice lately, you're seeing the market cap weighted indexes stop making progress relative to the equally weighted indexes, and that's simply the exposure, right? The cap weighted indexes are filled with the stocks and the sectors that have been doing the worst, and the equally weighted indexes don't have all that exposure, and they have more exposure to the ones that are doing the best, right? Is it that simple?
Yeah. I mean, equal weight S&P broke out first time in 2 years. Is a pinch extended? Sure, but that's usually a good thing when you break out.
NASDAQ 100 equally weighted just broke out too.
Yeah.
Broke out. Can they stick it? You think they're going to stick the landing?
I think in the next month or so, they'll maybe a little wobbly, do one of those, land on 2 feet, take a step back, kind of the gymnastics thing.
Yep.
Take a couple of points off. But then eventually later in the year, you'll be all right. I just have this, you look how extended things are and some of the defensive perking up, and I could see a little bit of a speed bump.
What's up with these junk bonds, right? Junk bonds never broke out. Look at the HYG, it looked terrible yesterday, down again this morning.
High yield spreads are like 300 basis points right now. I mean, that's super tight. You can get tighter, but again, it's like, okay, like low vol. Are you really only going to have a 2% drawdown in the S&P 500? It's not impossible, but it's improbable. Like 95 was the example then. I think 2017 maybe.
2017 was another one. 19 was kind of there too, right?
Yeah. So these sub 5% years where there's no equity drawdown and credit's fine are they're there. We know the probabilities are likely not in favor of that. And so high yield at 300 basis points, that's fine. But I think you could get a little bit of a blowout, and then you'll head back towards, you go to 350 or 400 basis points, and eventually you go back down to 300.
What's your favorite short?
My favorite short. Could I make the case for Bitcoin?
You can short anything you want. I don't know if you know this, but this is America. You can do whatever you want, baby.
Yeah. Bitcoin, a little starting to get a little creaky.
Yeah. How low? 50?
Where's the 50-day? I don't even know off the top of my head.
I was saying 50,000.
No, the 50-day moving average is that. I don't know what the 50-day moving average is. It's far away.
I'm not a 50-day guy. I'm not a moving average guy in general.
Yeah.
I'm more of a horizontal trend line guy.
I agree with you on the horizontals. Diagonal trend lines don't do it for me.
It's more of the diagonals is more of like a rate of change sort of,
true.
visual or whatever.
Like, but if there's a correction for risk on asset classes, Bitcoin would be the one that I'd say, okay, if you want the most juice on the downside, that would be it.
Is there a quad leveraged Bitcoin ETF or a double leverage?
No, but today SBIT is brand new, 2x downside.
Ooh.
I think on spot too, not the futures. I think it's on spot.
Ooh, SBIT.
It's brand new.
It launches today?
Yeah, from ProShares. And so ProShares did BITO, that's the futures version, and they have some leverage futures version. I think this is on spot. I might be wrong. But I got a press release for Bitcoin. And then there's BITU on the upside.
Ultra short Bitcoin. That'll help you sleep at night.
So if you're feeling confident about risk coming off in 2Q, which Seems like it. Maybe I'm wrong. There you go.
You know, in the old days, Todd, and I could tell you lots of stories of different declines in the equities market that we've seen over the years. And in a lot of them, the easier trade was just to buy bonds instead of shorting individual stocks.
Yeah, no.
And in this environment, this obviously ain't that. But is it? Can you make the same argument towards like oil or gold, where you know picking a short might be more difficult than just buying oil and gold, like bonds have been in prior cycles?
Yeah, I think I get what you're saying. I would
Pick it up
rather
and put
buy
it down?
energy. I'd rather buy energy long than be short. Try to pick a short in Nvidia or something like that.
That's kind of my point.
Yeah, Nvidia will correct, semis will correct. Maybe semis are the choice to short, but like it's just so much easier to buy energy that looks.
That's what I'm saying. Like I remember in the fourth quarter of 2018, as bearish as I was, the best trade we put on was long treasuries. And COVID, when COVID hit, I remember we were short like Google, we were short a few things, but the best and easiest trade was being long bonds. But this obviously isn't that. But
Treasury TLT doesn't work here. I'd rather just buy BIL and sit in that if that was the case.
Treasuries are dragging down the stock market.
Treasuries are, if you're long duration, you have the same volatility as equities. It's like you're not helping yourself.
You're not helping yourself at all. You're making your matters worse.
The only reason I buy treasuries is if the whole world is just going to fall apart and super recession.
If the whole world is falling apart, the VIX is probably going to be above 14.
Exactly. Yeah. So if you're trying to buy bonds, then just stay at the short end of the curve and have fun there. Don't bother
because you're in cash. You're in cash.
You're in cash. You're getting the same rate. Just without
BIL is the best and most liquid as far as I'm concerned, right?
Yeah. It's 1 to 3 months, and it's huge. There's plenty of other options out there, but TLT, EDV, ZROZ, they haven't worked.
But here's the difference: BIL is a place to hide out. It's not a directional bet.
No, that's just if you're uncomfortable with risk right now, you just sit there. As opposed to saying, all right, we're gonna have a huge rate cut like fourth quarter 2018, and then you buy TLT.
Right.
That was a perfect environment for that. They immediately cut rates, COVID hits, right?
One last question before we let you run. What do you think it's gonna take, or is there anything that you think other than the end of the world, right? Because that's not really a good answer. But what do you think it's gonna take for the long end of the curve to go back to being that safe haven that we had grown accustomed to for so many years?
I don't know. I don't have a good answer.
I don't know either. That's why I'm asking you.
If I knew, it's some crazy event, an exogenous event. Aliens come down,
Right. If aliens hit, you buy treasuries.
You buy a 3-body problem on Netflix. I don't know if anyone's watched that. That's Aliens. No one's watched it.
Todd, who do you got in the tournament?
Which one, the men's or women's? Because I watched the women's game last night. It was sick.
Oh, I'm so glad you brought that up.
With you guys.
I watched too, so let's do both.
Okay, the men's.
Same answer? Both?
Well, UConn is just, you can't bet it. UConn is just too hard to beat right now. They're freaking steamrolling everyone.
Look at that smile on Strazza's face. Look at that. He can't even help himself. So giddy, like a little schoolgirl.
The women's, I gotta go Iowa. I mean, this seems like friggin' destiny.
They're gonna be tough to beat. Yeah. So it's what's her name? Caitlin Clark and this Eckers girl from UConn. That'll be fun to watch.
It's gonna be a good game.
Amazing.
The game last night was I know more women in the Final Four than I do men's players.
I hear you. I hear you, man.
This girl, she's like Steph Curry. It's crazy.
She's literally Steph Curry. It's amazing.
She might be better, comparatively speaking. All right, Todd Sohn, thanks for hanging out, man. Always a pleasure.
Todd, you're the man, dude. Appreciate it.
Too. Thank you.
We bring them the tough questions, right? We don't make it easy on Todd. You know, like what is this? You think this is the Cartoon Network? Come on, this is we're hard hitting journalism here, right, Spencer?
All right, we got to talk Tesla here. We have a chart ready. This is news is a little old in quotes now. It's out a little while ago, but it was still out this morning. This chart does not show the morning's price action, but they're out with their deliveries for the first quarter, production and delivery numbers. and it was not good. They delivered about 386,800 cars last quarter, which was down 8% on a year-over-year basis. It was down 20% on a quarter-over-quarter basis. Production numbers were also down. I'm going to read you this here from CNBC. According to a mean of 11 estimates compiled by FactSet, analysts were expecting anywhere from a high of 511,000 deliveries to a low of 414,000. And again, they delivered 386. So they came well below the most bearish estimate for Q1 deliveries. And the stock is reacting to that this morning. Actually, all the EV stocks are reacting to that this morning. So this chart does not show that, but that's the news.
At the end of the day, we have to remember this company still sells cars.
As opposed to like the other ones?
This is not a tech company. They want to be.
Okay.
I'll tell you that they are, but they sell cars. And the valuation, when we were just at the upper bounds of this range that you have drawn here, around $400, basically what the market was pricing in is that someday in the future, not too distant future, the majority of the cars you see on the road will be Teslas. So they have some really big, I guess, expectations to fill on their valuation. And at the end of the day, they still sell cars. So it's always been a tough one for me.
Look, I mean, in defense of Tesla, their deliveries have gone basically parabolic every year for the last 6 years, right? But so this is actually the first time since 2020 that they had a year-over-year decline, and that was because of COVID, right? A year-over-year decline in deliveries. So this is, I sort of equate this with remember, was it a year or maybe it was 2 years ago now that Netflix had their first ever drop in subscribers. This is kind of like that in terms of like red flag, like whoa, is that the end of the growth here, right? So from an underlying business standpoint.
I got something to talk about.
Anyway, yeah.
What, we're good? I mean, any thoughts on the Tesla chart, JC? I don't have much to say about this one.
Just example number 297 as to this is not 2023. It's a much different market environment. Things started to change for real in February. You started to see some cracks in January, but really started to change in February. In March, you definitely saw it. But this had already started to change in February. It's a different dynamic. I think that the investors that are incorporating the strategies that were working best last year are getting hurt. I think a lot of strategies that are working the best this year, particularly since February, are strategies that were not working last year. It's just a different dynamic. And if you can't adapt to the market changes, you're going to get hit. And, again, I hate to keep bringing it back to the bonds, but, they say that you shouldn't kick someone when they're down, right? But actually, the best time to kick someone is when they're already down, right? And I think that investors that are fleeing to long duration bonds as a safe haven are already down and wrong. And it's going to be, investors are going to have we're seeing it, have a hard time wrapping their heads around this new regime where long duration bond volatility, like Sohn said, you're not helping yourself. You're making matters worse because it's essentially equity risk that you're taking. And I think that Tesla is just a great example of that. You're seeing it more and more and more. And investors fleeing to those long duration bonds are getting hammered. And like I said, that's the best time to kick someone when they're already down, and they're down. And I think the pain trade is lower treasury bonds, higher interest rates, higher commodities. That's the pain trade. And I think it's really just getting started. Like when you say kick someone when they're down, I think they just recently fell down. Now you really start kicking them.
I'll go back to what I've always said about Tesla, which is the stock has been around since 2010. And with a couple of exceptions, like it has had a couple of the best years any stock has ever had.
And then
outside of that, it has really not been that great. Right.
Great point, Spencer. What this stock does, and
Oh.
we've seen it a couple times already. This is such a good point. I wish I had a zoomed out chart to show this. It has 1-2 years of just massive gains and then sideways for 5-10 years. And this is the second massive range that we're seeing in Tesla. JC, I remember the last time Tesla was super range bound for years. There will be a time when we're going to want to be buying this stock again. I'm very confident.
And I'm very confident that sentiment is going to be really washed out.
Yeah.
Right. Like it was in all those others.
We've seen this before.
Yeah. And I'm fairly confident. I don't know for sure, but I'm fairly confident that the mess is going to take a while because all those other ones took a while too. So we'll see. Yeah.
Right.
I'm more confident in the other ones than how long it's going to take. But I'm fairly confident that it's going to be messy for a while.
Bring Pat on, and I want to do a little chart request live update. You're going to get what you want, Wavy.
Oh boy. All right. That's coming on.
What's going on?
Hey,
How you
summer,
doing?
man.
Hi, Patrick. I was going to save this for Chart Request Live because we take this stuff seriously that we talk about, and Wavy's our favorite. Wavy's always in the chat on Chart Request Live.
Whoa. We don't have favorites here.
We don't have favorites, but we like Wavy.
We get it. Be Wavy. And
Wavy, you're one of my favorites, buddy. Don't let them talk to you like that. I
all
got
I'm
you, bro.
saying is we wouldn't do this for everybody. And you're right. So Wavy talked about getting short MicroStrategy. Patrick, do you remember this moment?
Yes, yeah, and we scolded him.
We did.
We
And
did.
now he's coming back, chirping in the chat about his MicroStrategy short. So I went back, checked the notes. Because, yeah, we scolded him. We said, that's crazy. So here's what would have happened if you shorted MicroStrategy. March 19th, Wavy, I recently put on a MicroStrategy short. Plan to cover around 817. The position moved more than 50% against you in the next week and a half. So you either got blown out, or I would have to ask you, what kind of risk management protocols do you have in place?
That's a fair question. This thing went to almost 2,000.
Yeah, the options market is expensive as hell too. But if you recall, the puts were cheaper. The real premiums were in the way out of the money calls in all of those crypto names. Remember that. So the puts were not as expensive as the calls.
I think the bigger point is sometimes this sounds a lot easier than it is.
Oh,
It's
yeah.
easy to look back 2 weeks now. Oh, what a great short that would have been. 99% of people, that wouldn't have worked for. A lot of people, that would have been a really painful position to be in. Up 50% against you in a week. You know what I mean? So executing is the hard part of all this. I think that's a perfect example. This is just a volatile name. It's become one of the poster children preferred vehicles of this crypto bull market. It's just tough to bet against right now. I don't know. Would you get short here, JC? 3 red candles?
MicroStrategies?
Yeah.
I'm not touching this thing.
Yeah, right?
I don't hate it as a short. I don't hate it as a short. But where do you cover? You know, there's a huge short interest, like a ridiculous, crazy short interest. So I just don't personally love shorting stocks where everybody wants to be short. I like shorting stocks like Apple that people love and think that it's going up forever and everybody uses Apple products and like all that bullshit that people have convinced themselves that. Those are the names I like to short, not the ones where everyone's like, this is crazy. It has to go down. Let's all short it. Like, I don't want to short that one. You know?
Yeah, and that just happened last week. Did you see the Hindenburgers came out? One of these short shops with a report simply on the premium.
Did you just call them the Hindenburgers?
It's like the Hindenburg Research. It's one of these short shops.
Love that Hindenburgers.
Yeah. Hindenburgers. They're just pointing out that the premium is a little bit excessive here. That's it. So they're doing a little pairs trade. It's an arb trade. Not the most bearish report, I guess is what I'm saying. But yeah, crowded short.
Kyle, what's on your mind? Right?
Oh,
Bring
man.
in Pat. Strazza just yelling at Wavy. You know, I want to know what Pat's seeing.
Energy is definitely interesting, and not just traditional energy. I actually think clean energy is looking kind of interesting. For the
Have you been in
first time.
California too long? What are you doing?
It's possible. It's totally possible. But no, I mean, these stocks have been absolutely killed since 2021. Really haven't gotten a real rebound. The only thing I can think of, like biotech, is kind of similar, but you're finally seeing that rebound. So I think this one, it's kind of due for it. I don't know if this is it, if this is the low, but here we are testing those 2018, 2020 lows. So this would be a logical place to do it. You got a bullish momentum divergence. I'm not sure I would go with the ETF itself. Maybe looking around in the space.
For perspective, this ETF's down 85%.
Yeah, I mean, trust me, you got to know what you're doing here. It's definitely a downtrend, but some mean reversion, I think, is probably due, and at least that.
And what's in this thing?
Oh man, Solid Power, Array Technologies, First Solar, Fluence Energy, Bloom Energy. But then there's also ICLN?
Yep.
The other.
Oh, I know that one.
Yeah.
This is a very equally weighted-ish ETF. No stock is worth more than 2.25%.
You're saying you like this, Pat?
What's up?
You're saying you like this?
I think it's due for a bounce here. I really do.
It's
I
an
think
interesting look. I don't hate where your head is at. I'm definitely not buying it here, but
also like TAN too, the solar ETF. You're seeing a lot of these renewables.
Strazza, this is very sorry, Patrick. Strazza,
Yeah.
this is the same conversation we were having with solar yesterday, I believe, where we were like down to, there's a lot of solar stocks in this ETF, so it's a similar story.
Right.
Yeah.
You guys liking the energy here?
Damn, a lot.
I really like that bonds go down every day. I really like that. That's the pain trade. I think that there are people stuck in this old mentality. They're down, and that's when you kick them. I think this could get ugly.
Why don't you short bonds instead of stocks?
It's not as clean. Like, I'd rather own energy and metals than be short bonds.
TLT right now against these pivot lows, I don't hate that.
I don't hate it either.
I
just think there are easier trades.
Yeah.
Where are you guys, how are you guys thinking about the gold miners right now?
Just starting to like them, Pat.
Really?
Flip the book. Let's go.
Okay.
Crazy. Silver too.
Yeah, it's Strazza the Boomer over here telling me about gold and silver stocks. Who is this guy? Who is this guy?
Got some AD.
Guys, you're breaking your New Year's resolution. You know that
already. And
already.
It's only I made it 3 months, guys.
What was the New Year's resolutions?
No gold.
Drink less Italian wine. That was mine.
No precious metals.
That's a stupid resolution.
No, it's not. I think it was.
Hey, there's no shame in making it in 3 months.
I think that there's a time and a place for everything, man.
You're right, Pat. Wow, that's funny.
I think there's a time and a place for everything. What about traditional energy? I know you're good friends with Todd Sohn as well. I thought he made an interesting point that not only are we not seeing inflows into commodities and commodity ETFs, actually still seeing net outflows. I thought that was really interesting.
Crazy.
Whoa. Yeah, I mean, you look at DBA, that thing's going nuts. And I know that has a lot of exposure to cocoa, so it's kind of interesting to think about if that's completely driving it, or if cocoa reverses, will that completely fall apart? We'll see, but you're seeing it from DBC too, energy related commodities. So it really looks like commodities are picking up, and I guarantee you people are not positioned for commodities to make a comeback here.
Again.
And what are people saying about it, you think? You think they're starting to get attention, or still not really?
Yeah, but it's that disbelief thing, where it's like they notice it, they see that it's there, but they're not going out and buying these things. They're not even probably considering some of the opportunities yet, or looking.
I like what you said there, Pat. I think Pat makes a great point. It's the disbelief sort of phase. It's the, I see it. I'm not in it, but I see it. But it usually goes away, and I just buy my treasury bonds and my, my Apple and whatnot, and then, they usually always comes back.
It's like the people who call Bitcoin a bubble, and then they just really want it to go away and just forget about it. And
that's right. And it just doesn't.
Keeps coming back.
Keeps coming back. All right, Spencer, you want to hit that bumper?
We can. There's a few other things we had on the list we didn't talk about. Just some news real fast. We'll get to this quickly.
Yeah.
Another spin-off today. This is from GE. So they spun off Vernova. So it's GEV is the ticker there. Another in a continuing series of GE spin-offs.
I'm sorry. What is the
it's
ticker?
GEV is the spin-off spun off company. Spun off? I don't know.
It's fun.
Schlumberger doing some M&A. They're buying Champion X in an all-stock deal. PVH getting the beats this morning. Philip Van Heusen, weak guidance for the current quarter. On their earnings report last night, stock was down this morning. It's been a huge winner. And Microsoft is unbundling their Teams and Office products to satisfy antitrust stuff from the EU.
Wow.
So.
Interesting.
Man, you mentioned GE there. GE is going absolutely bonkers. That thing. Talk about disbelief.
GE did two things, right? They did a reverse split to get their stock above $100, and they started spinning everything off left and right. And those two things seem to be working.
And then what happened today with the price adjustment? Like, it's not down 20%, but like what?
No.
Something happened.
No, it's a spinoff. So the GE, the old GE, is now the price is reflective of the fact that they have fewer assets. Right.
Understood. It's flat on the day.
Flat. Exactly. Well, yeah. I mean, I don't know if it's flat. You would have to look at GEV and do the math, but yeah.
What stands out to me from that list of headlines is just more energy M&A.
Yep.
What happened in the energy M&A?
Schlumberger buying Champion X. I didn't write down the ticker on it. CHX.
I don't know Champion X.
Yeah, CHX.
You know them, Strazza?
What?
CHX?
Nope.
It's a $7 billion services from Texas.
Yeah, I was looking at it this morning.
And this is an all-stock deal, not a cash deal, which means that CHX is going to now, until this deal closes, CHX will trade with however Schlumberger trades. So Schlumberger goes up, CHX goes up. Schlumberger goes down, CHX goes down.
Tesla blames sales drop on Houthi attacks and arson in Germany.
That's a strategy.
Let's call this as it is. While we were anticipating a bad Q1, this was an unmitigated disaster.
I saw that.
Hard to explain away. We view this as a seminal moment in the Tesla story for Musk to either turn this around and reverse the black eye Q1 performance. Otherwise, some darker days could clearly be ahead that could disrupt the long-term Tesla narrative.
That's from Dan Ives.
Maintains outperform.
Hey, listen. I know a long-time Tesla bear. I don't know if he'll talk to me, but if he will, should I try to get him on the show? He's a sell-side guy. He's been bearish Tesla for years.
Yeah,
then no. Why would we want somebody who's been so wrong and looks like an asshole on our show?
That's why I'm asking. I'm just asking.
If Jim Chanos wanted to come on, we would talk to him.
But Jim Chanos ran a short fund and was long the S&P 500 the entire bull market. Not just some rando sell side guy who's a hater on Tesla.
Okay, all right.
Look,
fine.
Big difference.
Asking.
All right. Sometimes it's good to know. It's good to know the bear thesis, though.
Yeah, but we like to have people that have an open mind, that are not stubborn and hard headed. Like, come on, you've been short Tesla this entire time. Sell side analyst, come on.
Anyway, all right. Recess time.
Recess. Brett Conrad, that's funny.
Yeah.
No, I'm not positive Gordon would even talk to me because last time we spoke, it was heated, but I could try.
I'm sure he loves his kids.
All right. Throw up my new custom index. We made an Amazon of index because these stocks have always kind of stood out to me. We've seen these stocks be market leaders in cycles before. If you were to pull up the online retail ETF iBuy, there would be a lot of overlap here with what we did. You want me to read off some names of what we put in here? I think this warrants.
Yeah, how many you got in there? I'm curious.
There
Jumia.
We tried to be a little bit selective, and
Mercado Libre.
Yep. Yes.
Jumia.
Yep.
I don't know what China would be. Is that PDD? I don't know.
SE.
PDD's in. C Limited is in. Yep.
There's
a lot of China. You're missing a big one from Canada.
Shopify.
Shopify's in. Coupang is in.
Amazon is not in this though.
Amazon is in this. For
Oh.
sure. Yep. Yeah.
But why is the Amazon of another country? I guess why? Because it's the Amazon of America.
Yeah.
I mean, we could take it out, but
I think you take it out. What do you?
Right.
I mean, yeah, take it out. Take it out.
Right.
I mean, do both. Do like an X. Do like an Amazon of XYZ country X Amazon. How many stocks are in it X Amazon?
7.
1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12.
Wow,
That's a lot.
that's a lot.
There's a lot of these, and they keep popping up. So the reason why we did it is we're looking through. We've been digging into all these different emerging markets names. JC, we're building a new universe. Been running some scans, and this KASPI came up. Throw up the KSPI chart. Relatively new issue.
Oh, is this Kazakhstan?
Whoa.
Kazakhstan.
Okay.
Retail. So like every
right.
maybe not every country, but every region has some sort of like online retail name. And investors get excited about these a lot of times because they're growthy, right? So KASPI.KZ, KSPI, 25 billion. It's digital payments, online retail, it's fintech, all that fun stuff. Not bad. It's really only been trading this year, so 3 months. But
Listen, if you guys don't have enough exposure to Kazakhstan's technology boom, this is your vehicle to express that thesis in the open markets.
Now, Steve, does this have anything to do with what you're saying in frontier markets? Because you shared that chart of frontier markets. I think that's a great point. And those are breaking out ahead of emerging markets too. I think that's interesting.
yep, Pat, spot on. It's a theme, right? The riskiest stocks around the world, whether it's some sort of frontier markets name or if it's Kazakhstan online retail, right? The most risk on, the most offensive groups, most offensive stocks around the world are trending really well, completing reversal patterns, taking on new leadership roles. This is really, really positive bull market stuff.
Is it fair to say that chart looks very nice? Is that?
That was funny, Spencer.
For those who don't know, when you look at the Frontier Markets ETF, the KASPI is actually the largest holding, 7% of the Frontier Markets ETF. Fun fact.
Oh, wow.
Also, the National Bank of Kazakhstan is up there too. So the Frontier Markets ETF gives you plenty of exposure to Kazakhstan, more than any other ETF I've seen personally.
All right, recess. Anyone have anything?
I want you to do your impression again. Can you hit the bumper and do that impression?
I hit the bumper. We did that.
Oh, we did that already.
We've been in recess. This is recess.
This is recess. Oh, I thought this was real market commentary. I was being serious.
No.
Oh.
I got something. I saw one of those SpaceX launches yesterday. I just looked up in the sky and I just saw all these crazy contrails and stuff. It was pretty cool.
Really?
Yeah.
Should I talk about my SpaceX trade, or maybe save it for tomorrow?
Yeah, let's hear it.
Yeah, all right. DXYZ, everyone. This is a closed-end fund. It's been on the market for less than a week. It invests in private companies like SpaceX. It's got 40% allocation to SpaceX right now. I did sell half yesterday. I was in it from last week. It went up a lot, so I sold half. But I'm still in it. So
is this Destiny Tech 100?
Yeah.
What is
invest?
What is
what?
That? What are you doing? What is this?
I just said it's a closed-end fund. Then invest in private companies. Invest in space.
It's only been trading for 4 days.
What gave you this idea? Who
I saw it. Howard was tweeting about it. Howard Linson.
Oh my god! All right, we should have him on to talk about it then. You space cadets. Patrick.
Why don't we? Yeah, have him. Come on.
Yeah. All right. I guess that's my recess. And Caitlin Clark. Oh, she's amazing. I love her. Oh man, that was great.
Who is she? Who is Caitlin Clark?
She's better than Steph Curry for the women. She's better. She's
plays for Luke.
She plays for Iowa.
UConn.
She plays for Iowa.
Iowa.
Gonna be amazing.
So last night is the first time I actually watched her play. JC, you got to watch a game. It's
amazing.
She's really good.
It's incredible.
I'm not gonna watch.
I'm gonna say over under 9 million people watched the game last night. LSU versus Iowa.
Not a lot.
That's a lot. 9 million people. That'd be a lot.
I don't know anything about TV ratings. Is that 9 million people? It doesn't sound like much.
Imagine I can't imagine what her nil deals look like right
There's
now.
8 billion people on Earth. 9 million people watching TV is a lot.
So there's 300 million Americans. So that's, what is that?
A lot of people.
All right.
All right.
All right.
That's what we got.
We got Spaces 11.
Yeah. Spaces
Charter
at 11. Charter Quest Live at 1. And potentially another surprise video in the afternoon.
Surprise.
Ooh. All right, guys. Ooh, a little foreshadowing.
Take care.
All right. See you. Make
Adios.
some money.
Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then I go